Welcome back, everyone. For you do now, I was asking you to explain, how do banks make money? How do banks function? What's their purpose, and how do they make a profit on it? And it's going to be kind of our goal today, is to understand how our banking system works, which may seem like it doesn't fit with what we're doing, um, because we're talking about how the government gets involved in the economy. But banks are going to play a big role in our next major government action, is that they're going to utilize banks to influence the economy. So we got to take a step back and realize how banks work to understand our next thing, which is called monetary policy. So banks are not owned by the government. These are private companies. You have things like Chase and First Bank and Wells Fargo, all those things. Those are private companies. The government does not own them, though the government does regulate them. And the way banks work is they'll take in money from average people for like a savings account. You put your money in the bank and they'll say, we'll hold on to it for you. And whenever you need it, you go back and get some. Hopefully you have a savings account. If not, we'll talk about it in our next unit about how to create one. But what banks do with the money, they don't just take your money and put it in a vault. It's not like there's some secret vault somewhere or lock with your money stashed for them or for you. They take everyone's money and put it together. And they don't keep it in the vault. What they do is they save some of it in like a vault or something, but the rest of it they're going to loan out. So people who need like car loans or home loans or school loans, whatever it is, can go to a bank and borrow money. And then they charge you to do that. It costs money to borrow money. They call it interest. It's a percentage of however much you borrow for how long, all this stuff. But they make profit on the money they loan out. They are using your money from your savings to loan out to other people to make a profit. Now, you're getting a little bit of that when you put your money in a savings account. You get a little interest, but it's very small. They're making interest off the loans they give out to other people. And we have this phrase, interest, the cost of borrowing money, percentage of how much was borrowed over time. We'll watch a quick video kind of explaining how banks work. You can pause this one. And like I said, these are heavily regulated by the government. The government has a lot of influence on how banks do what they do, how much money they have to save during any given time, how much they're allowed to loan out and to who, depending on your risk, and how much they're allowed to charge. There's a lot of rules about how banks can work, and it's very controlled by the government. There is a Bank of the United States. It's called the Federal Reserve. You can't go put money in it. You can't borrow money from them. It's a bank for banks. So First Bank and Wells Fargo can go to the Federal Reserve and save money or borrow money. The Federal Reserve also insures those banks. So if something were to happen, the bank goes out of business or it gets robbed, whatever it is, your money is still safe. The federal government will back it up and they will pay it in case you need it. So it's definitely safe for the people who are saving their money there. And like I said, the Federal Reserve works with banks. Sometimes it's called just the Fed is their nickname. We'll watch a video about the Federal Reserve real quick. For activity today, you're going to be reading about banks and how the banking system works. Because, like I said, the Federal Reserve is going to be our last government involvement. The government's going to influence how our money works, and they're going to do it through banks. So we'll learn about how banks work, answer some questions, then tomorrow we'll talk about how the government uses banks to influence the economy.